Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are more than 1% higher this morning after a report from the Wall Street Journal said that President Donald Trump told aides he's willing to end the U.S.'s military efforts in Iran, even if the Strait of Hormuz remains largely closed. This comes as higher oil prices continue to impact markets. Currently, benchmark ICE Brent crude is trading over $117 a barrel. Despite the elevated oil prices, Federal Reserve Chairman Jerome Powell said on Monday that he sees inflation expectations as, quote, well anchored beyond the short term, end quote. Here's what else is on tap this hour. As part of a limited series, entrepreneur and investor Richard Branson spoke to Holganix's mission and why when you, quote, strengthen the soil, you strengthen the whole system. You won't want to miss what else he had to say. Plus, our very own Kristen Scholler was recently at the Hill and Valley Forum in our nation's capital. She spoke with a variety of leaders, including U.S. Senator Mike Rounds. He had plenty to say about AI's future and scaling cybersecurity. And at 9:30 Eastern, Hershey, the company behind some of your favorite candies and snacks, will ring the opening bell as part of its Investor Day event right here at the New York Stock Exchange. Later in today's show, we're going to speak with the company's Chief Growth and Marketing Officer, Stacey Taffet, about its next wave of momentum. But we begin with the markets, as we always do here on NYSE Live. And joining me now is Jay Woods. He's the Chief Market Strategist at Freedom Capital Markets. Jay, welcome.
Hey, good to be here.
So good to see you.
Yeah,
we're 30 minutes away from the open. What are you going to be looking at most closely?
Well, right now, Hershey's is ringing the bell. I'm looking for free chocolate. But no, we're going to see if this rally can sustain. All right, what happened overnight is we got some positive news reported by the Wall Street Journal that we may have an ending or some sort of pause, at least, in this conflict. If that happens, the market should rally. But what we've seen is during these last 2 months, every rally is met with resistance. Every rally has been sold. This market continues to be in a downtrend, under key moving averages. So I don't think this is the rally that, okay, snap our fingers, it's over, let's run back into the market. But if we can get some more clarity over the coming hours, days, that there is an end in sight and that the price of crude can get back down into the low 90s, that'll give traders hope that maybe the worst is behind us.
And the report that you're talking about, as I mentioned earlier, Trump saying they may end the fighting even if the Strait of Hormuz remains closed. Why do you think investors are so bullish on this?
Well, they're hopeful. I don't know if we're bullish on this news, but as Jerome Powell said yesterday, he doesn't see the inflationary impact lasting for a long period of time. He didn't use the word transitory, which is his old word that got him in trouble. But right now, we haven't seen those inflationary fears come to fruition in the data. That's coming. And now the question is, how long will it last once it hits us when we get that April data over the coming weeks? So I think the market is kind of in this phase where we look at the president as the boy that cried wolf, and every time he tweets something and says, oh, no, you know, the market should rally from here. Okay, we do, and then you know, what are you doing to make us sustain this belief that the worst is over? We haven't seen that yet, and it's more of a show me and get me some results. And right now, we'll get that knee-jerk reaction up. And instead of buying the dip, we're selling the rally. And that is something we don't want to see. Earnings growth has been there. The underlying companies have been doing well. What we're worried about is that next earnings cycle and what they have to say during that guide. If this continues, they're going to have to guide about possible impact of higher oil prices, inflationary fears, unemployment rising. These are potential risks. We just don't know if they're going to happen. But the longer this goes on, the more likely is we're going to see a Fed that's not going to cut rates, possibly raise rates, and then we're going to be talking possible recession fears. So we've got to navigate these waters, the Strait of Hormuz, very carefully. And if we're going to just let that be taken care of by somebody else, I don't think the market's going to respond favorably.
What do we typically historically see during geopolitical events? And do you think this time will be different with the markets?
No, I don't think it'll be different. Usually you get more of a drastic sell-off as the conflict starts, as that uncertainty unwinds. One of the things we haven't seen is that drastic sell-off. Yes, Fear sentiment is at all-time lows. That's usually signs of a bottom. The RSI, Relative Strength Index, a sign of momentum going oversold, is there. Usually when you get these things, you're near a bottom. What we haven't had is full-blown washout panic. So if we do go boots on the ground, or if something does escalate, you may get that capitulation in this market. You don't want to see it. I mean, no one's rooting for these things, but if we get that full-blown fear, that's usually the time to buy. The RSI in the S&P 500, the Relative Strength Index, is measuring under 30. That is a sign of an oversold condition. Historically, when we get those are good times to buy, but we haven't had that washout. We can be oversold for an extended period of time. What I'd like to see is some sort of capitulation to the downside. And when you have headlines like this, it's good, it gives us hope, but we're still in that show me phase, and this rally is probably going to be sold unless we get more clarification that troops are moving away, we're getting some sort of peace plan in place. I don't see that right now.
And you're talking about this conflict in the Middle East having an impact on Fed policy. Gas prices, the AAA said today they are topping $4 a gallon in the U.S. How much of a widespread impact do these geopolitical events have on markets?
Yeah, I filled up today. It was $1 more a gallon than it was 4 weeks ago. You start to feel that. And as a result, consumers, people living paycheck to paycheck, are going to change the way they spend. Those vacations, they'll get cut back. The discretionary spending, no, we're going to see it ease. So it will trickle into the economy. Gas is the biggest tax on the American consumer. So we can't just say, okay, it's going to go up and come back down. I hope that's the case. But right now, as this drags on longer, we're going to see a potential correction. So levels you watch in the S&P 500, 10% correction. It's happened in the NASDAQ 100, happened in the Russell, happened in the Dow, not the S&P. 6,300. We'll get that correction. All right, we can check that box. We've gone down 10%. What I'm looking for in more of a flush out is something to like the 60-50 level. That would be 14% from its peak. Not a bear market. I don't think we're going to go into bear market territory, but we will have a change at the Fed. So possibly new look at Fed policy going forward. So there's a lot of uncertainty right now in a time period where we don't have earnings. We're through first quarter earnings season. So we'll see. We're coming up on the anniversary of Liberation Day. That was where we saw the washout, the bottom being April 9th. Liberation Day, April 2nd. So maybe we see some sort of pattern evolve again where the market finally flushes out and we rally. And one thing we do know about our president is he does use the market as a report card, and the market speaks to this administration. So if we do get a flush out, that may change the way we look at things, and that could be a good thing for investors over the long term. We'll see.
How do you think the market feels about the administration?
The market, well, I'll just tell you how I feel as a market participant. I'm tired. I mean, I wake up every day looking for the latest tweet. But the market has gone from risk on to risk off. And instead of buying the dips, which the retail investors were rewarded for last year, we are selling those rallies until we get more clarity. So it's tough. You don't know how this is going to end. And when you're in a hostile situation like we are, you look at it very differently. You hope for the safety of our troops, and you hope that we can get a good resolution that benefits everybody. But right now, it's more wait and see. And an investor, long term, this is going to be a great buying opportunity. But short term, living through the ebbs and flows of this situation is a little frustrating.
And we only have a few seconds, but do you think it's wise to buy the dips right now?
Oh, I think so. I look at Microsoft, I look at Google. These are two big overbought stocks, two of the biggest companies in the world. I think they're giving investors an opportunity to buy over the long term. And then the traders, these software names have been beaten down. So technology, which has gotten battered, is where I think we're going to rotate back into. And when we do, that'll lift the market. The question is, how high can it lift it? Will we get back to new highs? I don't think we will anytime soon, the next quarter or two. But at least we won't go down. And if we go sideways for a little while, I'm happy with that.
All right, Jay Woods, Chief Market Strategist at Freedom Capital Markets. Thank you so much for joining us at the New York Stock Exchange. Coming up, entrepreneur and investor Richard Branson participated in a limited series centered around Holganics. Listen to what he had to say about the company's efforts to revolutionize soil and agriculture up next.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself. It's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Holganics is on a mission to bolster soil health and is working with American farmers to revolutionize the way crops and plants are grown. And the company has some big name supporters like entrepreneur and investor Richard Branson. As part of a limited series, Branson spoke at length about the work Holganics is doing and why it's crucial to the future of agriculture. Check it out.
Soil is alive and microbes make it work. There's a company called Holganics, for instance, which is focused on bringing that life back at scale by restoring healthy soil biology. And when the soil is working properly, firms use nutrients more efficiently, they cope better with drought, and they rely less on costly artificial fertilizers. And this can scale because every farm depends on healthy soil. Strengthen the soil and you strengthen the whole system, from growers to global supply chains. To build wider trust, the sector needs clear data and consistent results, capital-backed solutions that reduce risk and deliver steady performance. And when the evidence is strong, scale follows. The future economy will be built within planetary limits. And the question is, who chooses to lead that shift? Soil connects climate, it connects water, biodiversity, and obviously food. And it may be one of the most underestimated assets we have. When soil is healthy, it stores carbon, it retains water, it supports biodiversity, and it strengthens our food systems. When it is degraded, everything becomes more fragile. Regenerative agriculture is gaining ground globally because it builds resilience from the ground up and it reduces dependence on costly chemicals. Healthy soil addresses several planetary pressures all at once and does so at a meaningful scale. It makes farms stronger, it makes supply chains steadier, and businesses become much, much more secure. There are so many dangers attached to climate change, and climate change is simply too much carbon going into the Earth's atmosphere. There's a blanket growing every single day around the Earth from this carbon. It's getting thicker and thicker. And so we need to come up with a simple way of taking that carbon out of the atmosphere and back underground. Now, you could, for instance, use seaweed and try to sink seaweed to the bottom of the sea. That's something that is being worked on, and that could be one of the answers. But obviously, you're not going to make a living out of doing it, and it's going to cost an enormous amount of money to do. Another way is a company like Holganix that has managed to develop a product that actually makes the roots much bigger and makes the earth much healthier. And if used on mass scale, could make not only an enormous difference to the plants themselves, but an enormous difference to the planetary boundaries that we live in, and hopefully reduce carbon on a mass scale. Planetary science needs to sit alongside financial risk management in every boardroom. The boundaries define the safe space when innovation and growth can flourish. If you step outside that space, and physical stress quickly becomes financial stress. Nature sets the rules, and we cannot renegotiate with them. We already manage financial exposure professionally, and we now need to manage planetary exposure with the same seriousness, because capital markets ultimately depend on stable Earth systems. Everything is connected. Climate affects water. Water affects food. Food affects stability. When one system weakens, the pressure spreads. For a long time, growth was designed as if nature sat somewhere outside the economy, and it does not. The economy sits inside natural systems, and when those systems destabilize, markets do too. And if the planet is unstable, then business becomes unstable too. We're very good at pricing financial risk, and it's time we brought that same discipline to planetary risk. The planetary boundaries are the guardrails that keep our planet and our economy stable. Some call it an operating system for planet Earth. Johan Rostrom identified 9 Earth systems that underpin prosperity, and today 7 of those 9 systems are breached. That should be a flashing warning sign for every business leader. When we cross those limits, risk shows up in supply chains. It drives up costs, and it threatens market stability. Long-term success depends on staying within them. Companies that follow the science reduce risk, and they build resilience. The answers are there. We just need to scale them.
Thanks, entrepreneur and investor Richard Branson. Coming up, the Hill and Valley Forum in our nation's capital brought together many influential leaders. That includes U.S. Senator Mike Rounds. Hear what he had to say about the future of AI and cybersecurity next. And we see the Hershey crew about to go up to the podium. Their CEO and President Kirk Tanner signing the guest book in advance of their Investor Day. We'll have more next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
the New York Stock Exchange the home of ETFs.
Welcome back to NYSE Live. The NYSE sponsored the Hill and Valley Forum in Washington, D.C., which took place last weekend and gathered leaders across government, technology, and industry. Our Kristen Scholler was on the ground and spoke with several of these leaders, including U.S. Senator Mike Rounds from South Dakota. Here's what the senator told her about what he believes were the most important storylines from the event.
Number one, AI is here to stay. And the question is how do we continue to develop it, while at the same time assuring the American public that there are guidelines that will be put in place to protect their privacy, and that this is the only place in the world where literally we care not just about the development, but also the privacy as well. So we want to bring the folks that are actually developing it and bring them in with policymakers and talk about that connection between the two. We have lots of things that we're concerned with here in our policy, particularly with the defense of our country and so forth, and the integration of AI into a lot of our systems. But it's not just the defense of our country, it's also for the improvement in the quality of life for Americans overall. And AI can play a huge part of it, but technology in general has got to be something that when the valley comes to the hill, they also share what works and what does not with policymakers. That's what this is all about.
How optimistic are you that the Hill and the Valley can work together on this?
We don't have a choice. We have to work together. And I think the fact that this has been a successful conference of people coming in and actually finding out that policymakers want to do the right thing for the people in this country. And the folks coming in from the Valley are saying, look, we've got great ideas, but how do we implement them? How do we coordinate it? How do we make sure that our ideas are at least heard and that our concerns are heard as well? That cooperative spirit is something that I think some people for a number of years didn't see happening between policymakers and tech developers. We want to change that.
Your panel that you'll be speaking at on stage is titled Scaling Cyber Power. How do we do that?
Well, first of all, we've got real capabilities in the cyber world today. It's the newest technologies. It's incorporating artificial intelligence into our capabilities in the cyber world. How do we protect our systems from those that want to get in? But also, how do we utilize AI and our offensive cyber capabilities to send a message to adversaries who right now are playing with us? They try to get into our systems, not necessarily with any kind of a deterrence on our part that we can always point to. So part of it is defending our systems, both for the people that live here in the United States, but also for our defensive operations as well. The Department of Defense has to protect a lot of things. Along with that, we've got to be able to send a message to the bad guys that we know who they are, we know where they are, and we fully intend to limit their ability to get in and to hurt the people of this country. That offensive capability is one that sometimes we don't talk about, and people wonder whether or not we're providing the deterrence necessary by not talking about it. But I'll go one step farther, and that is the bad guys have lots of people who can develop capabilities. We've got to incorporate artificial intelligence to keep up with people that have simply large numbers of developers.
As a senator on the Hill, what do you need from the Valley community to accomplish this?
First of all, we need them to be here and to share with us what their capabilities are. Second of all, they need to understand that we have a lot of the same goals that they do in terms of privacy protections, but also outside of the United States, we've got real bad actors that are after not just what's in Washington, D.C., but what's in the Valley as well. And so we have a common thread of protection that we've all got to be concerned with. They have lots of things that they want to protect. They have patents, they have copyrights, and so forth. The bad guys really don't care about that, and they want to get in and they'll steal anything they can. How do we work together to make sure that our policies help to protect their intellectual properties as well? Really important to both sides.
Finally, Senator, why is this forum important now?
because times are changing rapidly. And the folks that come to us with some of the greatest technologies that are changing rapidly as well, they keep track of it. They work it. It's their life. For policymakers, we're always trying to catch up. And at the same time, if we don't put policies in place that allow them to grow and prosper, they might go someplace else. And we can't afford that for the defense of our country, and we can't afford that for the quality of life that Americans are going to expect. With new technologies, healthcare is going to be totally changed in the next 5 years. We want to make sure that we provide the opportunity for them to do it, but to make sure that all Americans have access to that change and the improvement in the quality of life that better healthcare can provide. Artificial intelligence is here. It's not going away. The Valley understands that. Policymakers want to make sure that we incorporate the right kind of policies and guidelines so that it's not slowed down, and that folks in other countries, we don't want them to get ahead of us in this.
Thanks, U.S. Senator Mike Rounds and Kristen Schuller for that interview. And coming up, the Hershey Company, one of the longest listed companies on the New York Stock Exchange, is going to ring the opening bell. Don't go anywhere.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Years since the first telephone conversation. Even 150 years ago, we saw the importance of human connection.
If you think back from that first time when that connection was made and you fast forward to today, every innovation that was required in communication came out of this company. The important lesson of getting to 150 years is sometimes you need to know when it's time to move on to the next thing. It's your turn of this generation to figure out how 150 years from now, when somebody else is sitting up here, they're all talking about the really cool things that you did at this moment.
Welcome back to NYSE Live. Earlier this month, AT&T, the 11th longest listed company on the NYSE, rang the opening bell. Today, the Hershey Company, the 37th longest listed company on the exchange, will do the honors. There they are up at the podium. Kirk Tanner, Hershey CEO and president, is going to do the honors. Let's hear the bell. Hershey chant on the floor of the New York Stock Exchange. Hershey, of course, here to celebrate their Investor Day happening today. I heard that there is a candy giveaway on the floor when Lance Flynn interviews their chief growth officer. We'll have to find out if he got some sweets, and stocks are officially open for trade. Joining me now is Mark Newton, Managing Director and Global Head of Technical at Fundstrat. Mark, welcome to the New York Stock Exchange.
Thank you, Ashley. Great to be back.
All right, so markets just opened. Yeah. What are you going to be looking at most closely during the session?
You know what? I think investors need to be concentrating on the fact that markets can't really rise until we see some evidence of stabilization to some extent in the Middle East. We need to see crude oil start to pull back. We need to see interest rates and the dollar start to roll over. Those are all things that started to rise as stocks started to sell off. So, you know, it's nice to say, well, it's time to get in and buy, but unfortunately there hasn't been no evidence of capitulation. Momentum and breadth have gotten worse in recent weeks. Parts of technology continue to deteriorate. We've seen the software malaise now spread to areas of semiconductors in the last few days. So that's a little bit of a concern. If we can't see some evidence of Mag 7 trying to stabilize, tough to think we're going to have a big rip-roaring rally. I would say, you know, I do sense that we're close, and we're approaching the one-year anniversary of last year's lows. It seems the administration really has reached their pain threshold, and so we really need to see evidence of something concrete happening. And unfortunately, you know, this is almost like the boy that cried wolf. I mean, the markets are not responding. You know, these comments are really losing efficacy in terms of helping the market potentially turn back higher as they would in the old days. I think markets really need to see evidence of something more concrete. And at that point, I think markets, honestly, will have a very good period between the spring and the fall of this year. But a very tricky environment for investors right now. A lot of volatility, not just in equities, cross assets.
What do you make of the Wall Street Journal report that came out today that said Trump may end the conflict in the Middle East even if the Strait of Hormuz remains closed? We saw markets jump. Do you think that will be sustainable?
Yeah, well, I think it's interesting, but not surprising. I mean, we need to get the price of crude oil down, as well as any hint of inflation rising. We need to also have that turn lower. Heading into summer driving season, we have the midterms, of course, coming up. They cannot have crude oil at $100 or higher and think the GOP can have any reasonable chance of winning the midterms. And if the GOP loses the midterms, and look, it's going to be a lame duck presidency in the last couple of years, they won't be able to accomplish a whole lot. So really, there's a small window where they really need to figure out a way to get out very quickly, or at least de-escalate from a point of view of the American standpoint. You know, as to when the broader conflict starts to dissipate, I mean, that's going to take time. But first and foremost, you know, we want to put something in place to obviously negotiate in a way we can get the strait open eventually, get food and energy flowing through the strait, get crude oil down, get food prices down. That would be a welcome relief. And then couple that with potentially a very good deal with the Chinese coming up in the next month. That's really, really going to be key.
We're really seeing markets swing on these oil prices. Why does oil have such an impact on markets?
Well, it's just the velocity of this move, I think, has caught markets off guard. When you saw big breakouts back in mid-February, when you go from $60 to $100 very quickly, that has huge implications not only for earnings but also for you know, inflation across the globe. We saw the MSCI Asia Pacific Index is set to potentially have one of their worst months in about 15 years. So we've seen literally $14 trillion in wealth erased since the beginning of this. The world is looking for solutions, and they're all looking towards the U.S. and Israel and trying to see some way that we not only can we try to finish the job, so to speak, but we can try to de-escalate and help the prices of everything pull back. And I would couple that, one important thing investors aren't paying attention to is the amount of helium disruption that's happened based on the strait closing. That is essential for semiconductor chip production, and we've seen recently evidence of that supply shock, you know, causing evidence of semiconductor chips starting to, you know, stocks starting to pull back. Breakdowns in NVIDIA last week. I sense that it should prove short-lived, but tech is something we all need to continue to be focused on, just given its percentage in the S&P. My sense is we're within 1 or 2% and within a couple weeks of at least a tradable bottom. As to whether it's sustainable, my thinking is we need to see rates and crude pull back meaningfully, see some evidence of capitulation on any further drawdown. All of those seem near, but we're not quite there.
You mentioned the market volatility from last year approaching the one-year anniversary. Do you think this is similar to what we saw with tariffs?
in some ways, it's very similar when the market gets caught off guard with news that's unexpected and it can cause implied volatility, be it the VIX to really spike. But I don't see it being true in a way that we could de-escalate maybe that rapidly. I mean, the market at that point last year was down about 20%. Now we're down about 8%. So it's actually been a pretty orderly sell-off. It hasn't been as detrimental when we look at high yield. It hasn't been your, a bear market type decline, even though it feels awful. So I sense that, it's going to be perfectly normal to think that we can bounce off of this and potentially get back to new highs, but it's going to be tricky for the time being. Financials is one group I would mention that has actually started to stabilize a little bit in the last month. It was hard hit initially, then the rest of the sectors played catch up. Technology was pretty strong in the last few weeks, and then of course we saw semiconductors start to pull back. But I think tech and financials are really the key to this market, and to me, it seems like by the middle part of April, there will be some signs of that you really want to buy dips and sort of hold your nose and buy when markets are down 8 to 10%, and think that we're ready for a pretty decent rally into summer and into the fall.
All right, and we only have a few seconds left. Anything else, anything under the radar that you think we might be hearing about in the coming weeks?
Yeah, the big thing I think is to watch what's evident with the helium disruption, because that's so critical for semiconductors and probably something investors aren't paying attention to as closely. And just keep an eye on crude oil. Yet you really, really have to watch all these things, even if you're just an equity investor, and look what's happening with interest rates and with the dollar. My sense is this is a trade where all of these are moving, in this case, they're all moving up and equities are moving down. And so watching those carefully based with technicals can certainly be helpful towards seeing when they're going to turn down. I don't sense it's going to be an earnings-led recession. I think we can get out of this, but still a very difficult tape. 6,200 to 6,300 is my area for the S&P. I think we're getting very close.
All right, Mark Newton, Managing Director and Global Head of Technical at Fundstrat. Thank you so much for joining us at the New York Stock Exchange. Still to come, the RSAC 2026 conference brought together the biggest names in cybersecurity, including Aviatrix CEO Doug Merritt. He'll join me to explain why he believes the gap in cloud security is undeniable. And speaking of tech evolution, February's Vast Data Conference focused on the future of AI. A company executive told me why AI is, quote, a team sport, end quote. And later we'll head down to the trading floor where Hershey Chief Growth and Marketing Officer Stacey Taffet opens the wrapper to Hershey's game plan for growth in the coming months and years. You see the floor now. You just saw their mascots. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Last week, the biggest names across the cybersecurity industry gathered in San Francisco at the RSAC conference to map out the future of cyber. Joining me now is Doug Merritt. He's the CEO of cloud networking platform Aviatrix. Doug, welcome to NYSE Live.
Thank you, Ashley. Very good to be on again.
So good to have you. What are your biggest takeaways from the conference?
As you'd guess, there isn't a tech conference happening in the world where AI is not front and center. Every conversation was focused on how rapidly AI is progressing and a lot of concerns around whether we've got the right security controls around AI or not. The interesting element that I saw in cyber, there's two core elements. How do you stop the bad guys from getting in? And then what do you do if they're in? The world is still really focused on how do you stop the bad guys, which is really important. We obviously want to do that. But when they get in, the most important element is how do you contain them? And that clearly is a lot of what we're focused on here at Aviatrix and the world really needs, especially in the cloud right now.
How has the cybersecurity landscape changed since we've seen a rise in AI? And what types of things are you seeing happen in that realm?
Yeah, last week was interesting for one of a breach that we can talk about, this light LLM breach. But if you think about AI, there's two elements that people are talking about. One, it's a new set of tools for the attackers and the defenders to use, and that's getting a lot of airtime. But when you hear there's a massive new attack surface and it's attached to AI, what people are saying is AI, cyber is all about protecting software, hardware, networks, data from the bad guys. AI is a whole host of new software, hardware. It generates a ton of data. It uses networks. Without networks, it's incapable of doing its work. And that creates a new attack surface, new things for bad guys to go after, as well as giving them the tools to attack in more ingenious ways. And that new attack surface is deeply interwoven with the decades of existing software, hardware networks that we're already trying to defend against. So it's not just a new attack surface, it magnifies that attack surface, and it's growing exponentially. Every agent that comes in is a new piece of software, and it needs software to actually operate. This breach that happened was a critical piece of middleware that people weren't watching. So it's both tools and attack surface that provides both concern and the need for new defenses.
And how is all of that changing the conversations or informing the conversations that you are having at the conference?
Well, right now, as I talked about, most people are worried about prevention. How do I stop the bad guys from poisoning the AI agents and having them act in a bad way, much like turning an employee rogue, so that the access that they have, they'll use to give sensitive data. What happened during RSA, not a surprising timing, I am sure, a hacker team poisoned a commercial version that you download over the web, the commercial version of middleware that's used in over a third of enterprises globally to connect all the users, all of us inside of a company, to the core LLM engines, OpenAI, Anthropic, Google, that we all talk about. Because it has this critical middleware, it has all the keys to the kingdom for the key data repositories and software within the cloud for every corporation. What they poisoned, they inserted malware that immediately had that software once it was downloaded, send those keys to the bad guy's site. And it installed a bad door so they could get back in and do harm. That was the simple prevention that people are missing, that I am blogging about and videoing about and talking about everywhere I can, is if we just pivot back to foundational network security controls, we can govern exactly what those agents and middleware talks to. It was a known bad site. It's like having the bad guys get into a vault, but you've got a set of bars that come across and keep them inside the vault. They're there, that's not great, but they can't do the damage. They can't take the jewels and the valuables back out. So I'm urging all executives to look very carefully at their cloud stance and make sure that they have that network level security to stop these bad things from happening, because a lot more are going to happen, and they're going to happen very quickly.
All right, Doug Merritt, CEO of Aviatrix, thank you so much for joining us on NYSE Live.
Good.
In other news, last month's Fast Forward 2026 conference in Salt Lake City, Utah, brought together leaders to collaborate on shaping the future of AI. I was on the ground and spoke with several of these leaders, including Vast Data VP of Global Partner Organizations, John Cedillo. Here's what he told me about the importance of partnerships to the success of his company.
Well, so much of where we play in the market today is subject to a lot of noise. Everyone has been coming to market and articulating what their value proposition is around bringing AI to their customers, and it's become more of a game of self-proclamation. So from the perspective of partners, it's actually more people starting to rally to what your perspective is on that market. And because of where we play inside of this broader ecosystem, we have the unique capability of pulling on application builders, model builders, the infrastructure partners that all make AI a real thing that customers then can take and deploy inside of their environment. So partners are the reality. AI is a team sport of team sports is how I describe it. And more so than anything else, it's the idea that we are not lacking for customers with AI ambition. We're lacking for customers who have gone through and experienced successful outcomes, and partners are critical in that.
All right, what are some of the most notable partnerships?
Probably our most successful partnerships up to this point have really revolved around our OEM relationships, those the like of Cisco, HPE, Lenovo, Supermicro, as well as our ISV ecosystem partners. So those would be more similar to Excel Data, even some hardware-centric partners like NVIDIA and AMD. So the type of co-development that we're doing with them and the types of solutions that we're helping build real reference architectures around is what we focus on with that extended ecosystem. And they all come together, and these solutions become real through our reseller partners.
Do you think you have to be on the same page in terms of vision with these partners in order to build something meaningful?
Absolutely. I mean, the whole concept of ecosystems working together and finding that rhythm between them, it's all around structure. Sometimes people think structure is an inhibitor of creativity, and I argue it does the exact opposite. Structure gives you clarity, clarity gives you purpose, and purpose gives you the ability of knowing where it is and how it is that each vendor in that ecosystem works, operates, and functions together. So inside of all of that, yes, I would absolutely agree that that's how it is that we see it.
Do you think it starts with clarity, and how important is clarity at the start of a process of deploying this technology?
It is the simple answer is it is the most essential thing. So here this week, we were able to do partly a sales kickoff as well as our user conference. And in our sales kickoff, our CEO, Renan Halleck, was talking about this concept of whatever it takes. We do whatever it takes because we've had a clearly articulated plan. So that plan is what brings that clarity. So the more that we are able to have that clarity of where our roles begin and what that outcome that we're chasing after actually is for a given customer, we can then really mobilize the entirety of our organization and bring the entire weight of that ecosystem to make the customer successful.
And I know you announced an expansion of Cosmos. Can you take us through that?
Certainly. So Cosmos is really meant to be this representative ecosystem of the entire spectrum of partners and customers and thought leaders and visionaries from this market that we're playing in that's starting to get a lot more clarity when we talk about AI and driving successful AI outcomes. It's an arena in which we are able to build, co-develop, validate, and start to commercialize some of these solutions. One of the most difficult things that I think customers are going to be encountering over the next few years is separating that signal from the noise. And to do that, it's much more about developing full stack solutions. And that requires a closed loop system where customers are able to provide feedback to the vendors and to the partners that are working together for their benefit. And that's exactly what Cosmos has been extended to facilitate.
And what do you think the future of Vast Data in terms of partnerships is?
I think that partnerships are going to continue to be one of the single most important growth drivers as we move forward, because just as much as we start to see the acceleration of AI adoption today in our market, the simple fact is it is accelerating everything in technology at a much more rapid pace. So if we were to think about this through the curve of innovation, it feels like we're going through an exponential curve right now just because of how fast things are moving. But in 2 years' time, that curve is going to continue to become more steep, partners are going to be essential in helping to, again, create that signal and separate the noise.
Thanks, Vast Data's John Cedillo for that interview. And coming up, we're going to take you to the trading floor where Hershey's Chief Growth and Marketing Officer will give us the details about the company's upcoming plans. Stay tuned.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Earlier this hour, NYSE-listed Hershey rang the opening bell as it holds its investor day right here at the New York Stock Exchange. I want to send things down to the trading floor where Lance Glynn has more. Good morning, Lance.
Good morning, Ashley. Thank you so much for sending it down here. I have loads of candy in my hand. I want to just eat all of it. I can't right now because I'm currently joined, fresh off the podium, fresh off a bell ringing, by Stacey Taffet. She is the Chief Growth and Marketing Officer for Hershey. Stacey, thank you so much for joining us this morning.
Good morning. Thanks for having me.
So just set the scene for us today. Obviously, Hershey here to celebrate and mark its Investor Day. What are you hoping to share with everyone who's here at the NYSE?
We are very excited to be here to share our vision for leading next generation snacking, really taking the portfolio into the future. And we're going to share our strategy, which has three main components. The first is about our portfolio. So you have some great products there in front of you. We have a fantastic core that are market-leading brands, and we're going to continue to grow those brands by leading into modern brand building and commercial execution and driving growth there. But then there are all these growing parts of snacking that we're going to lean into as well and accelerate. That's within the confection category, premium, better for you, sweets, and then our salty portfolio and our protein and functional portfolio. The second thing we're going to talk about today is our One Hershey advantage, and that's how we're going to go to retail with our entire portfolio, sweets, salty, and protein. And then finally, we're going to talk about how that all comes to the consumer through an agile supply chain that allows us to fuel growth for the future.
And let's see what I got here. I got the classic Hershey bar. Obviously can't go wrong with the classic Hershey bar. The Twizzlers straw is a blend of coconut, lime, and vanilla flavors, and the Fulfill protein bar. So really just showing off the diversity that Hershey has among its portfolio. And like Hershey has been a household brand for more than a century, but when it comes to growth and portfolio expansion, as I just mentioned, how are you thinking about what's next and where that wave of growth will come from?
Yeah, so within our core confection, our candy business, there's a couple of areas that are growing ahead of the rest of snacking, and that's premium, better for you, chocolate. It's our sweets portfolio like Twizzlers, and we're really going to lean in with brand building dollars and media and innovation to capitalize on that. We also see a lot of growth in our salty portfolio. So we want to be number 2 in the salty category, which is a huge position for us. And we have great brands like Dot, Skinny Pop, Lesser Evil is new to the portfolio, Pirate's Booty, and we see opportunities to grow penetration with those brands and also expand into new salty categories. The third area is, you mentioned the Fulfill brand, but we have a really great protein portfolio with One and Fulfill that's growing ahead of its category, and that we have terrific plans in terms of investing in R&D and innovation to drive product claims and advantage in the market. And all of that comes together through what I talked about, One Hershey, where we come to market with the scale of all of those propositions.
And so, Stacey, we're in 2026, right? And obviously, modernization is key to keeping any brand relevant and important to, obviously, the consumers. What does modernization and brand building mean to Hershey here today?
I like to think about it as timeless, meaningful brand stories that come to life through a modern, more data-driven media ecosystem. And so we've made some changes in how we organize ourselves and how we're investing for that. The first is we're really understanding the consumer. And so we're building infrastructure to marry market signals with household level insights. The second area is we are bringing media, creative, data, and analytics all together into one team to ensure that media ecosystem is a flywheel that we can keep feeding. And then the last thing is measurement. We're now able to measure our data using AI and technology almost in real time, so we can optimize and allocate resources productively.
Well, Stacey, I look forward to just going to town on all of this candy in a little while. I appreciate you for joining us here on NYSE Live. Congratulations on obviously ringing the bell. Good luck in the Investor Day. Thank you so much for joining us.
Thank you so much. Have a great day.
All right, Ashley, I'm going to send things back up to you while I enjoy some of this just amazing candy.
Lance, what is the vibe on the floor? I saw the Hershey's mascots. I saw a Reese's mascot.
Yeah.
What's going on down there?
Yeah, I took a picture with them, and it is electric down here. Let me tell you. Like I said, there's candy flowing throughout the trading floor. Traders are getting some. People just watching the bell are getting some. I'm getting some, obviously, too. It is a great day here on the floor of the New York Stock Exchange.
And I'm sure Hershey is looking forward to their Investor Day.
Absolutely.
They are focusing on sweet, salty, and a protein portfolio. Lance, thank you so much. And that is going to do it for us today on NYSE Live. I'm Ashley Mastronardi. We will see you tomorrow back here at 9 a.m. Have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?